Okay, let's continue to discuss consolidated statement of P&L and OCI. So this page 470, can you see here if we have any intra-group transactions, expenses or income? So I would like you to remember that when we talk about intra-group, okay, these are the transactions that happen between holding and subsidiary. So any intra-groups, okay, all intra-groups transactions are cancelled. This is also to avoid any double counting. Okay, let's take a look at this example 3. Can you see here H acquired 80% of the 5 million issued ordinary shares, okay, of S. Okay, so we have, okay, I have classified this information into number 1 until number 5. So can you see here H trades with S, and during the year H sold to S goods of for 500,000. So H sold to S. So in this transaction, you must understand that to H, it is considered as sales, but to S, it is considered as purchases. So in this for this adjustment, okay, what you will do when you prepare consolidated statement of P&L and OCI, you have to eliminate under column sales, which is 500,000, because this is the amount of sales that appear in the books of H, because H is the seller. However, this 500,000 will appear once again down here, because sales here, when you want to prepare this consolidated statement of P&L, you will deduct sales from cost of sales. So under cost of sales, if you can still remember, what is the formula to calculate cost of sales? It is opening inventory plus purchases minus closing inventory. That is how you calculate cost of sales. So in this case, can you see here, you eliminate 500,000, and at the same time you also will eliminate 500,000. But what is the difference here? The first 500,000 here under sales, because to H, in the books of H will record as sales. However, in the books of S will record as purchases. So you eliminate as intra-group sales here. So when I explain to the students, I will mention that this 500,000, the first 500,000 is actually intra-group sales, and this one is actually intra-group purchases. Okay, this is how you eliminate the first additional information here, which is 500,000. Next, we have number 2. H price its sales to S at cost plus 25%, and 100,000 of these goods remain unsold in S. So this is quite similar with the one that we discussed under consolidated statement of financial position. So when there is intra-group sales, what happened here, we have inventories that is still being unsold by the seller. So do you still remember how to calculate URP of this unsold inventory? So you can see that unsold amount is 100,000. So you multiply by 25 over 125. So there will be an adjustment of URP of closing inventories of 20,000. Okay, let's continue with number 3. So we also have opening inventory of S includes goods bought from H for 25,000. So since this number 2 is actually additional information, number 2 here is actually URP of closing inventory, but this is URP of opening inventory. I hope you can relate both. Okay, what happened here, for this year, it is considered as closing inventory at the end of the year, let's say 31st December X9. But the next day, this closing inventory, when we open the books in the next accounting period, it become opening inventory. So again, for this opening inventory, there is actually goods that S bought from H. So you also have to calculate URP of opening inventory. How do you calculate? 25,000 times 25 over 125. So this will equal to 5,000. So this 20,000 is actually URP of closing inventory. 5,000 is URP of opening inventory. So how do you adjust these two figures? It will be 5,000 will be deducted, 20,000 will be added. So this is how you adjust to cost of sales. Can you see here cost of sales? Okay, now, next one. We have S paid a dividend of 400,000 and H recognizes its share of dividend from S. Okay, we have discussed also in consolidated statement of financial position. Okay, when S declare dividend and paid this dividend, 400,000, H will receive his portion. So according to the percentage, as you can see, since H acquired 80%, so out of this amount being paid by S subsidiary, out of this 400,000, if you multiply this 400,000 with 80%, so you will get 320,000. This is the one shown in this question as dividend from S. Can you see here 320? So this is income. This dividend is considered as income in the books of H. This 320,000 will be added. So what happened when you prepare consolidated statement of P&L? This amount of 320,000 will need to be eliminated. It will not appear as income to the group. Okay, so that is the adjustment, meaning you ignore this dividend from S in the books of H. You ignore because it will not appear. It will be cancelled out. It will not appear in the consolidated statement of P&L and OCI. Okay, let's take a look at the last one. H charged S for consultancy services of 120,000. The amount paid by S is included in its operating expenses. Okay, you have to understand when H charged S, okay, to H, in the books of H, it is considered as income. However, in the books of S subsidiary, it is considered as expenses. So you can see here, you can see clearly that income, okay, in the books of H. Consultancy services to S in the books of H. This is added. So this is income to H. However, it is considered as expenses to S. So when you refer to this question, we only have one expenses under column S, which is operating expenses. So it is understood in this situation, okay, that out of this 2 million ringgit operating expenses which incurred by S, okay, out of this 2 million, 120,000 is the amount that is being charged by H. So don't forget that you have to eliminate 120,000 from this 2 million ringgit. So that is actually how you can see here under operating expenses when you prepare consolidated statement of P&L and here 2 million plus 2 million, you have to eliminate, you deduct with 120,000 because this 120,000 is the amount of expenses which S incurred because it is being charged by H. This is intra-group expenses.